You are listening to chartingwealth.com for Friday the 28th of August 2015. We're looking at the stock charts. We're starting as we always do with IYY. And what do we see? Well, it looks like a long, narrow snake with a bit of a head to the far right. What is that showing? Well, we see a big down candle with a wick about 3 times the body length of the down red candle, way outside the Bollinger Band, and then a swing up. And I'm sure that you heard, if you were listening to the market mavens on Thursday, oh, the market's recovering. It's an up day of 2.42%. The SPY up 2.36 and the Q's up 2.35. Well, when you look at the total market and how much it is down, how much it went down, it is a bit of a recovery, still about middle candle as far as the big down candle, our 2-day down candle on the 24th. And again, we don't look at daily candles. Everybody looks at daily candles. That's why we don't look at daily candles. We look at the 2-day candle. And our 2-day candle back on the 24th shows a huge down move, and the recovery over the last 4 days, well, our two-day candles, what you see is you see movement well contained within that huge down move. Doesn't mean a recovery at this point. We do see that the MACD is still far separation between the moving linear regression line, what we call our signal line, and our MACD, moving average convergence divergence. Derivative oscillator on the 2-day charts lost a little bit of speed, a little bit of steam, and we're going to revert back now on our charts to the 4-hour chart. What do we see there? Well, we see the 4-hour chart attempting to recover. It has crossed over, going up. We have crossed through the 30 and the 34 moving linear regression lines. And as we look at the chart, we can see that our old 2-day trend line we have not crossed yet, that we drew way back before the plunge. We do have a crossover going up on the short chart, and we do have the derivative oscillator flipping over. But a short chart does not make a long chart. Now, does that mean that we're going to recover fully? Could. We could. I mean, we've had the Fed say now that they're not looking as promising as they were before on making an increase in the interest rate, but at the same time, we do see that the markets are extremely fragile. And of course, those of you who believe this was all about China, I don't think you are reading the tea leaves very well. This is about slowing down globally. All of us who've been saying, hey, things aren't as rosy as we've been told they are finally being proven right. I mean, do you really think that America is back to its prominence in the world and the economy is doing great? No, not at all. Look at the headwinds that we are facing, and you know that we're in shaky, shaky territory. Now, can the government, can the Fed do enough to pump this back up? Oh, yeah, they can. I don't know how you can go lower than 0 on the interest rate, but they can come up with all sorts of things to try to make things look better. We're still shaky. This huge drop back on our candle for 2-day candle for the 24th shows us that we've got some real problems and concerns in the market that we need to be cognizant of. And let me tell you, what we really need to do, we've got to continue to watch the charts. Watch the charts. It's the charts that tell you. If you just listen to the market mavens, the talking heads on TV, you're going to find yourself in a lot of trouble. Now, let's go back out to the 2-day, and we're going to look at the SPY. And what do we see? Well, a little different than you saw in the total market. You see that the SPY crossed over actually back on the 18th, going into the 20th. You saw where it crossed over, it started going down, that big plunge on the 24th, another one on the 26th. And what do you see for the 27th 2-day candle? It's just started its first day. Well, you see a spinning top, which means sort of a spinning top typically Not quite a doji, but a lot of indecision. It is a green spinning top, but it's right in the middle of the red down candle and still way below the red down candle on the 24th. Still way down that candle. So have we bottomed out here, and is the S&P 500 going to be going up? Can't tell you that. Let's look at the 4-hour chart. We can see that it too crossed over going up. But again, just because it crossed over on the 4-day chart, it has not gotten as high as the market was when it first started its plunge on the morning of the 24th. So let's just continue to watch. Just because it crossed over going up, hey folks, it may give us the great buy-in point that we saw on the Qs last week. If you were listening, heard me talk about how the short chart on the Qs had rolled up. In fact, I'll show you where that happened. That happened between the 17th and the 18th or the 19th, where the Qs rolled up and then rolled over, and our buy-in point to get into a nice trade would have been somewhere around noon or so the morning of the 20th, because from there we had it roll off the deep end, and if you were in something like QID, which is a double inverse of the NASDAQ 100, the Qs, you would have seen a good buy-in point. Now that we've jumped on that, let's go back and look at what the Qs is doing too. Qs crossed over going down on the 4-hour chart back on the 10th. Has not crossed over going back up yet. Some up movement over the past day, and that is pretty much where we are when it comes to the, 2 days, where it comes to the Qs. You can look at the 4-hour chart on the Qs, crossed over going up after the morning, actually into the afternoon, and it's nice when you see the crossover paralleling the cross in the derivative oscillator. But again, is this going to make for a complete turnaround? Don't know. We sure know that the Fed is doing everything they can to make the markets feel better and to try to drive it back up again, but I think people are shaky and scared. We'll see if there are other shoes to drop in the national economy or in the worldwide economy, because things are not perfect, as we all know and as everyone's become painfully aware. Now, let's go ahead and drop back to the 2-day chart, and let's look at our last chart. We're going to look at gold. What is gold doing? Well, we've been telling you, when gold started crossing back over yesterday, breaking the 2-day trend line, still is in a verified up move on our 2-day chart. However, look at what gold has been doing. And we talked about gold topping on the 24th, that's the 2-day candle, then starting its down move on the 26th, and we can see derivative oscillators crossed over. We also talked over and over again about how good the 4-hour chart has been for charting gold. It's been a really good chart for that. Crossed over, as we saw on the 2-day chart, the 4-hour chart, crossed over afternoon of the 26th, and we have seen again some down moves, but look at this. It's not moved below sort of the bottom it hit at about 107.55, so pay attention to that. The short chart has been pretty good for gold, but I'm always concerned where I start seeing a bottoming occur and where the price hangs out for 4 or more candles. That typically can be something for a little bit of worry, although we saw that happen back over here on around the 12th, starting on the 12th and through the 18th, where gold did about the same thing, sort of held around and then digested its up moves starting on the 10th of August, and then digested them through about the 18th and then shot up again. Well, it shot back down to right where, well, a little above where it stopped last time. It could keep going down, but again, this 4-hour chart has been a pretty good chart for us. We can see some nice clean moves that were sustained, but look at how much the derivative oscillator dropped right off along with the MACD. So watch them. Watch them. Hopefully, if you were in gold, you took your profits around the 24th or so, and you're letting gold do whatever gold's going to do. You're going to look for a good buy-in signal and ride it back up again. If you're in an inverse gold, pay close attention to where gold is right now. You don't want to lose what you've made in the drop. Folks, that's where we've ended the day on Thursday, the 27th, as we get ready to go into Friday to end this interesting week in the markets. We hope that you've enjoyed our Charting Wealth presentation that we bring to you every day. And don't forget, over the weekend, we will prepare for you the Charting Wealth Weekly Review and Forecast, along with Monday's program. Thanks so much for listening. We appreciate you. Join us on Facebook and Twitter. Go to chartingwealth.com, sign up for our newsletter. We love to hear from you. Oh, and go to the website and take our short course on reading a chart. Even if you can read charts, go figure out how we do it and let us hear some feedback from you for free. Great little 15-minute course. We'd love to get your feedback on it. Hope that you find it most helpful because, folks, don't pay attention to the media noise. Pay attention to the charts. From chartingwealth.com.